From a quiet desert town to a global powerhouse, Dubai's rapid transformation is one of the most remarkable economic stories of the 21st century. But what you're about to see might change how you view the Middle East's crown jewel. Dubai ranks among the world's most visited cities. The city has positioned itself as a top destination for business, tourism, and real estate. In 2024 alone, it welcomed over 18.72 million international tourists, making it the fourth most visited city globally, just behind Paris, London, and Bangkok, according to the Dubai Department of Economy and Tourism. The city's tourism sector contributes nearly 12% of its GDP, driven by its luxury hotels, shopping malls, and mega events like Expo 2020 and the Dubai Shopping Festival. In real estate, Dubai has long marketed itself as a dream destination for investors. With projects like the Burj Khalifa, Palm Jumeirah, and Dubai Marina, the city became a global architectural ambition. In 2025, the number of real estate transactions reached 125,538, up from 99,947, an increase of 26% from 2024. According to the Dubai Land Department. The city recorded approximately 431 billion UAE dirhams, setting a new record. Dubai's location also makes it a critical global hub. The Dubai International Airport remained the world's largest and busiest for international passengers, serving nearly 92.23 million travelers in 2024. The Jebel Ali port is the largest man-made harbor in the world and plays a vital role in connecting Europe, Asia, and Africa. It contributes over 11.5% to the UAE's non-oil GDP. Dubai's economy has also diversified into finance, tech, and trade, hosting over 30 free zones and attracting multinational giants like Microsoft, Amazon, and HSBC. The city was ranked number 1 globally in foreign direct investment projects in 2022, according to FDI Intelligence. From tourism to trade, Dubai appears to have it all, a city that keeps rising. Through the 2000s, Dubai grew at lightning speed. It used oil money from nearby Emirates and followed a clear plan to grow beyond oil. The city invested billions into tourism, real estate, and trade. And for a while, it worked. Skyscrapers rose faster than anywhere else. Dubai's population doubled. Property prices shot up. Investors from all over the world rushed in to get a piece of the action. But here's the catch. Under all the flashy buildings and modern roads, not everything is as steady as it seems. So the big question is this: has Dubai truly become the dream city it claims to be? Or is it just another shining illusion hiding deeper problems? Let's dig deeper into the very sector that made and nearly broke Dubai. One of the clearest signs of Dubai's financial crisis is its struggling real estate market. Let's go back to 2008. At that time, Dubai experienced a huge construction boom. Skyscrapers, luxury homes, and man-made islands popped up everywhere. But this fast growth didn't last. Developers and investors borrowed too much money, which created a real estate bubble. When the global financial crisis hit in 2008, demand dropped sharply. Property prices fell by nearly 50%, and many projects stopped or got cancelled. Foreign investors pulled out, and many buyers who invested in off-plan properties were left with half-built homes. The market began to recover in the mid-2010s, but another decline followed after the 2014 oil price crash. From 2014 to 2020, property prices fell by nearly 30%. Since then, the market hasn't fully bounced back. Data from the Dubai Land Department shows that prices in some areas are still 25 to 30% lower than their 2014 peak. Now in the 2020s, we're seeing similar warning signs. What's causing this? The main issue is oversupply. Dubai keeps building more apartments, hotels, and malls, even though demand hasn't kept up. In 2023 alone, villa prices rose 18%, and overall home prices went up 19% year over year. The city recorded over 116,000 new property deals worth around $117 billion, but many of these units remain unsold. One big reason is affordability. While luxury homes attract foreign millionaires, they don't support the local economy. Many wealthy Russians moved to Dubai during the Ukraine war and bought multi-million-dollar homes without thinking twice. This drove prices up fast. In 2023, rents rose nearly 27%. Families now pay over $67,000 a year for average apartments, similar to top areas in Manhattan. Most locals can't afford to buy homes where they work. A study by Property Finder showed that almost 70% of Dubai's population are renters. Also, many buyers aren't looking to live in these homes. They're investors planning to flip them for quick profits. This short-term focus creates speculation, not real growth. When global interest rates went up and uncertainty grew, investors pulled out again. Still, Dubai continues to build rapidly. But buying homes that aren't finished yet repeats the same mistake that caused the 2009 crash. And it's not just real estate. Shifting population trends are now revealing even deeper problems in the system. Another big sign in Dubai's financial troubles is something many people aren't talking about enough. It's the expat exodus. Over the past few years, thousands of foreigners have quietly packed their bags and left the city behind. Dubai is home to around 90% expats. From low-wage workers to high-earning professionals, they've helped build and run the city. But now, many of them are leaving for good. So, why is this happening? Let's break it down. During the COVID-19 pandemic, many companies laid off staff or cut salaries. Even after things reopened, the job market didn't fully bounce back. According to Oxford Economics, around 900,000 jobs were lost in the UAE in 2020 alone, and most of them belonged to expats. Even highly skilled professionals were not spared. Airlines like Emirates and Etihad laid off thousands of employees. Hotels, restaurants, and event companies cut staff. Small business owners couldn't afford rent and had to shut down. Credit card defaults went up by 15% in 2021, as reported by Emirates NBD, one of the biggest banks in the region. Many people were stuck in debt and had no safety net to fall back on. With fewer families around, schools saw enrollment drop. Some schools closed permanently. Supermarkets and daycares followed. Even large shopping malls experienced lower footfall. Plus, expats don't have permanent residency. Once they lose their job, they often have just 30 days to leave. This visa rule has exacerbated the problem, particularly for middle-class families struggling to make a living. And with fewer people spending and investing, another major weakness in Dubai's economy becomes clear: its rising debt. The least discussed parts of Dubai's financial story are its hidden debt. On the surface, Dubai looks rich, with luxury hotels, massive real estate projects, and constant investments. But behind all that shine is a growing debt problem that many people overlook. In 2023, the International Monetary Fund, IMF, reported Dubai's direct government debt at about $49 billion. But that's just the official figure. When we include the debt of government-linked companies, the total rises sharply, likely over $80 billion. Dubai owns many large companies like Dubai World and Dubai Holding. These companies borrowed heavily, especially during the real estate boom in the early 2000s. In 2009, Dubai World shocked the world when it announced it couldn't pay back $26 billion. That moment exposed the risks of Dubai's borrowing model. Abu Dhabi stepped in with a $20 billion bailout to avoid collapse. But the bailout had conditions. Abu Dhabi gained more control over Dubai's decisions. Even the Burj Dubai was renamed Burj Khalifa to honor Abu Dhabi's ruler, Sheikh Khalifa bin Zayed Al Nahyan, clearly showing who saved the day. Today, many of the same risks still exist. Dubai's economy still depends on real estate, tourism and trade, all sectors that can suffer from global problems. Although Dubai has tried to grow other industries, debt remains a major driver of its growth. A 2022 S&P Global report showed that many government-related entities, GREs, still hold large hidden debts. These debts don't appear in Dubai's official budget. Instead, they sit under semi-government companies known as Dubai Inc. These firms act like private businesses, but are backed by the government. Credit rating agencies like Moody's and S&P have warned that Dubai's finances look better on paper than they really are. The IMF even estimated in 2023 that Dubai's total public sector debt could be as high as 78% of its GDP. But beyond the debt, Dubai faces another major risk: its heavy dependence on global tourism and travel. In 2024 alone, Dubai welcomed over 19 million international visitors, surpassing even pre-pandemic levels. That includes 8.55 million tourists in just the first half of the year, beating the 2019 record of 8.36 million during the same period. But this kind of success came with a hidden risk: overdependence. When the COVID-19 pandemic hit in 2020, the entire sector collapsed almost overnight. International travel was restricted, hotels sat empty, and events were cancelled. This proves tourism is a volatile industry. It depends heavily on global stability, travel freedom, and consumer confidence. And now similar new global risks are emerging. One major challenge is shifting demand. Russian tourists, who were once a major market, have declined due to sanctions and global tensions. Chinese tourism, which Dubai relied on heavily, has also slowed due to economic uncertainty at home. Another threat comes from regional competition. For decades, Dubai was the only Gulf city offering a liberal, luxury-driven environment for foreign businesses and tourists. But now countries like Saudi Arabia and Qatar are copying Dubai's model, opening up their economies, loosening laws, and building massive tourism and entertainment projects. Saudi Arabia's Vision 2030 alone plans to attract over 100 million visitors a year. This regional competition is important because foreign investment and tourism are what keep Dubai's real estate and retail sectors alive. If those flows slow down or shift elsewhere, it could shake the entire economic structure. There's another concern. Dubai's tourism economy is dependent on luxury tourism. If wealthy travelers cut back on spending, the city does not have a strong domestic base to make up for the loss. The global and regional environment is shifting, and Dubai is no longer the only player in the game. Dubai's leadership has proven capable of bold moves before, and they're not blind to the cracks forming now. But with limited time, a small local base, and overdependence on foreign money, the challenge is immense. Whether this marks a turning point or the beginning of decline, only time will tell. If this made you think, subscribe for more truth beneath the headlines.